We have Diana Bajramovic from MBS Highway joining us today. And for everyone else on here, I was just telling Jody, if you guys have any, whether you're doing presentations about art of homeownership or any like events that you go to where you have maybe art of homeownership like presentation material, feel free to send those over to us so we can feature it on social media. We're starting to incorporate some of our partners' content. Like I was just telling Jody, she had a really good reel that she had posted, and we're going to be featuring it on our page. So if you have any of that content that you're posting on your own social media, feel free to send it over to myself or the support team, and we'll get that out to highlight you. We would love to show some of our partners. Diana, welcome. Sorry about the link mishap. It's always fun stuff. How are you? How's it?
How are you? Good to see you.
Great to see you too. I know the market is a little crazy right now, and some stuff was going on yesterday that is exciting, and Diana will be presenting on it today. We always have really great content when we have the MBS team on, so we're so excited to have you. Do you want to tell us a little bit, just a glimpse, snapshot about what we're going to be going over today?
Sure. So first, I'm going to show a few slides because we know that right now is a very tough time. As you just said, Val, what we've been seeing in the markets is crazy. We haven't seen a lot of this since, early 2020, late 2019, really, when COVID started. So what I wanted to do was talk about some early recession indicators first, and then talk about what happens in recession and how you can overcome it. So obviously your customers and your referral partners are asking you questions right now about what the markets are doing, and you really should be prepared to answer them if you're not already. So we're very lucky to have the content to help you do that, as well as the tools. So first, we'll go over some indicators on some slides, and then we'll talk about some of the tools you can use in your daily business, if that sounds good.
Great. That sounds awesome.
Cool.
And I know there's usually a lot of questions around this stuff as we go through it. So if there are any questions in the chat, I'll just find a good spot to butt in and we'll address those. So if you guys have questions, as always, put it in the Q&A or the chat.
Yep.
But having said that, Diana, I will let you take it away.
Thanks, Val. And yeah, guys, please ask whenever you have them. If I see it first, Val, I'll just start answering. But if I miss it, just shout it out whenever. No biggie.
Okay, sounds good.
So guys, what I'm pulling up here is a chart that shows the 10 to the 2-year yield spread. And I think this is something important for all of us to know about, and especially now because it's getting close to a point where it acts as a recession indicator. So as we know, the 10-year yield and 2-year yield trade at different levels, and a normal market would have the 10-year treasury yield higher than a 2-year treasury yield. But when we're approaching recession and a not so strong economy, we're going to see that the 2-year yield becomes higher than the 10-year yield. That's an inversion marked in red on this chart here. So it's not a normal thing for the market to see. And notice that with 100% accuracy, we've seen that every single time we had this inversion, shortly after or even during it, we had this recession bar here, these gray bars. So every single time we've seen it, even here back in late 2019, we had this slight blip and then a recession shortly after. And look where we are now. Just yesterday, it actually was flat, almost inverted. I think it actually went inverted for a second or two, maybe by a basis point or two. So right now is when you're going to start to hear CNBC, Fox News, maybe even your competitors talking about this. So you want to get ahead of that and talk to your customers about it first. Now, I mentioned that we're already close or already at that flat level. This is a bit dated, but this shows you on a much more recent time frame. We've been calling for this since early 2021, where we've seen it go down from about 160 basis points all the way down now to almost 0. So what happens now is you're going to start to see the economy slowing. And when you think about it, you would think that entering a recession, that unemployment would be at its highest level. That's what most people would think, but it's actually the opposite. So if you look at a chart like this right here, you're going to see that the unemployment rate is actually going to be at its lowest level and starts to tick higher. And that's what brings us into recession. So another really accurate indicator, and look where we are right now, right at the bottom. Now this here, so it shows us that once we're into recession, we're going to see that interest rates actually move lower, which is a good thing for us in the mortgage industry. We can take advantage of that for our customers. So look what happens every single time. Right here, about 1%, here too. Every single time we see that interest rates went lower. And then lastly, we want to look at housing too, because We've always been advocates for housing and that it's strong in really any market and even in recessions, because a lot think that, especially because of this housing bubble time here, that home prices actually went down because of recession, but they actually started dropping before recession even hit. In every single other recession point here, we're going to see that home prices actually went up. So we think that recession is actually a strong place for the industry we're in right now, and we really want to take advantage of it. So those are just a few items that I think you should point out to your customers. These are all charts that you can find either in MBS Highway or in our daily morning update. So if you have questions, call us, we'll point you to them. But I do think you should watch the MBS Highway morning update every day, which I'll show you in just a second. So that's kind of what I wanted to start out with. And then once you log into your account here, you're going to see that this is your dashboard. So I actually am curious to see, are you guys newer members of MBS Highway, or have you been with us for a while? So if you could put that answer in the chat box, that'd be great. And then I'll ask for some other information throughout so we can customize these reports for you. Great. So welcome. If you're newer, welcome. Oh, hi, Ron. Good to see you on here. All right, so when we log in, like I said, this is your dashboard. So I think if you do anything on MBS Highway, it's at least going to be watch this daily morning update. I mean, there's so much more on there, but this is really, quite frankly, an easy thing to do. All you have to do is make the time each morning to listen to our team. So you'll see Barry, who we all know and love, start us out talking about whatever the major news item is today. Then we'll get into our little intro here. So for those of you that watch it, we play a fun little song every morning that ties into our theme. And then Barry will come back and continue whatever we're talking about today. So he actually showed this same chart that we just took a look at together. So be sure to watch this for a deeper explanation. And then he'll come back, talk about the markets a little bit, any other news items we have. And then you'll see the rest of the team, Megan, myself, and Jake come in, talk about whatever other items for the week we have going on. And then at the end of the video, if you're not familiar with candlestick charting already, this is a great thing to do every single morning, so you can understand what's happening in the market for yourself and then explain it to your clients and referral partners. So we'll give you our position, whether we think you should lock or float your pipeline, and the reasons why. But if you can't watch it, you do have the written version below. You can one-click share some of these social media graphics to your social media pages. And then you have an archive down below. So if you missed one, you can always watch it later, but we don't recommend that you skip maybe 4 or 5 in a row or a whole week in the row and come back and watch them all at once, because this information is really time sensitive. We want you to watch it that day. So before your customer can turn CNBC on and see these stories with maybe a negative spin on it, which happens more than we like to admit, you can get ahead of that and really talk to them and explain to them what's happening and how it can actually help them, rather than scare them out of wanting to refinance or purchase a home. Maybe you can encourage them to do so. So this is something I think you should look at every single morning. This is the morning update. And then you have the market wrap. So this is a short end of day write-up that simply just shows us what happened in today's business day and trading day and how we should go into the next day. So notice today's is dated for yesterday afternoon. Today's will be posted right around 5 o'clock Eastern time when the market closes. So be sure to read these 2 daily pieces of information and use them in your conversations. It's not something we recommend you share physically. You can't copy or paste it. Don't take a screenshot of it, but we do want you to study this and use it all day long in the talks that you have all day. And just to point it out too, you also have access in MBS Highway to this markets overview page here. And this is where we'll show you throughout the day live trading, but this is what our MBS Highway team has on their screen all day long. And we're going to watch this for you. We don't expect you to sit there, of course, all day and watch this. We know how busy it is. So if you're not at your computer, we'll send you text messages throughout the day telling you what mortgage bond pricing is doing. But the major item here is if we see a lock alert needing to be issued, if we think that the market is going to go down even further, we'll send you that text message, phone call, and email right away, letting you know, hey, lock in your pipeline here before rates get worse. And we're seeing a really nice turnaround here. So let's hope this continues in mortgage bonds so interest rates can continue to move lower. Now, let's get into some of the other tools on the site. First, we have this real estate report card, and I'll actually ask you guys to put a zip code in the chat box and we can customize this for your area. And while you guys are doing that, just know that you can also enter an MLS number, a street address, a county, and or a zip code. So know you can enter it in this search box right here, or under this classic drop downs option, you can choose your state and county. But I see Jody gave us 80127, so we'll search that. And this looks like it's in Jefferson County in this zip code. So notice that it gives you a one-page report that really breaks down everything a customer needs to know when they're looking to purchase a home. I mean, when you think about it, purchasing a home starts very physical and then ends up being emotional. So the customer goes to visit the home, they fall in love with it, they see themselves living there, but ultimately it's a financial decision. And this is the exact way that we have to sell to the client. And that's what this piece does for you. So when you're looking at this piece, you're going to see the first row will show us the median home price, about 682,000 or so, the average price per square foot, and then the appreciation rate. So we've seen very strong appreciation in the past, well over 4 or 5% here. But going forward, we're expecting about 7.7%. And then about 26% in the next 5 years. Now, we know the strength of these numbers, but it's hard for just anybody to kind of think of that in their head and know what it means to them. So what we'll do is we'll show them that if they purchase this median home price, over the next 5 years, they'll gain about $180,000 in appreciation. But of course, not everyone's looking at this same median priced home. So what we'll do is edit this with this pencil icon right here and show, okay, well, maybe this customer is looking at a $750,000 home instead. And if they do, they're going to see not only in the next 5 years do they gain almost 200,000 in the first year alone, almost $30,000 here, a little over. So even if this customer has to come in 10, 20, $30,000 over asking price, which is definitely not uncommon as we know at this point, this will show them, hey, you're pretty safe here. As long as you're going to stay in that home for the next year or two, you will make back your bid above ask as long as we follow this forecasted rate. Then coming into some of the inventory and supply and demand numbers here, we'll just kind of skim through some of these, but I want to point out the most important parts because just know, guys, that when you're navigating MBS Highway, if you have questions, you can always call us. We're more than happy to get on the phone, walk you through just like we are now one-on-one and show you how to use the tools. But I also recommend that you watch this video on the right side of the page and it'll pull up a training for whatever tool you're looking at. So you'll teach you how to create the piece, how to present the piece, and how to actually export it for your clients and referral partners. So be sure to watch those videos too. But getting back to our middle section here, we're going to look at inventory. We have just 3 homes available for every 1,000 people in this county. We're down 16% in inventory year over year, down about 2% month over month. And then we'll show you our demographics. So we always break it down by age range, and we highlight this 27 to 35 age range because these are our first-time home buyers. So in this area, in this county, it's our second largest demographic, about 82,000 individuals. And we want to know what kind of demand we have there. And this is very important. First-time home buyers are big for us to keep an eye out for because you think about it, a first-time home buyer, they're just taking a home from inventory. They're not moving out of another one and replenishing inventory. Whereas a move-up buyer, for example, or anybody that currently has a home, they're going to have to sell that home, put it back in inventory, and then purchase a new one. So they're keeping the inventory level the same. But first-time home buyers is what raises our demand level. So we can see on the right side that out of these 80,000 individuals, almost 8,000 of them annually will leave mom and dad's house and rent or purchase a home, or maybe it's a couple, they're splitting up, they need 2 roofs over their head instead of 1. Either way, we're considering it a home being taken off the market, a formation. And then since we have a 70% home ownership rate here in this county, almost 5,500 of them will purchase a home. So really we need to meet up to this 5,500 homes annually number to meet our demand. We're only building 2,500 here. So we're obviously very short. We know the problems here. Builders simply just can't keep up. Even if they're in construction right now, these homes, they can't get them delivered because of chip shortages, labor shortages, wage pressure. All that is really affecting these builders and they can't keep up with our supply. Then coming to the middle piece here, or sorry, the end piece, I should say, is going to show us our jobs picture and our affordability. So we see our employment was pretty steady over the years. We saw that drop due to COVID, but now we're on the steady rise upward and we do expect to see that continue. And then our unemployment. So we're going to see the national average is 3.8%. We're going to get new updated numbers on Friday. So this will be changed. Hopefully it goes down to what they're expecting at 3.7%. But currently we're at 3.5% here. Still strong though, compared to what we've seen the last 2 years prior. So then we have our median household income, more than double the national average, which helps our affordability. So we saw it's a little bit lower than what we saw in the past, but still really good, about 100, let's just call it an index of 100. And what that means is the family earning this median household income can afford 100% of this median home price up here when putting 20% down. And of course, not everyone's putting 20% down, but it gives you a good gauge of what you can afford. So guys, this is a piece that I think you should share with, again, every single purchase client and every single realtor partner that you work with. You saw how easy it was to put together. If you could take seconds out of your day to put this together, we know it's so busy, but it is worth the effort. And once you start to learn how to explain this piece to clients and referral partners, that's what really makes the difference. If you send your clients something, every time you start working with them, if they're a new buyer or maybe a move up buyer, put this in your packet of what you send to them. It'll really make a big difference. So on the right side is where you have your action center. I already mentioned this help video. Be sure to watch those anytime you get stuck on a tool. But then I want to show you the sharing options. So for this one, we're going to look at the export option and we'll choose a co-brand partner. So let's just say Barry's my referral partner. If you have Spanish speaking clients, you can export some of these pieces in Spanish. And then you can download this as a PDF, as an image, or you can email it to yourself as a PDF. So I'm going to export as a PDF, but just know that you can share this, or use this on your phone. So it's nice and easy. If you're on your phone, you can email it to yourself, and on the go, you can show the piece to anybody that you're with. But here's what it looks like when you open it up with the branding. If you do not wish to co-brand, it'll just be your company logo on the right side instead of the realtor, and then the piece that you've customized down below. And honestly, a lot of our subscribers too, what they do is they take an image of this piece, they can export it as an image, put it right on Facebook, Instagram, LinkedIn, and share it and say, hey guys, look at this report for whatever county, in this case, Jefferson County. Send me your zip code or send me your county and I'll send you a custom real estate report card. It acts as a really great lead generation tool too, just like all the tools, but I think this one is so easy to get started with. I wouldn't wait for this one. All right, so I don't see any questions yet. If you have any, don't hesitate, we'll answer them whenever. But the next tool I'd like to go over is this bid over asking price report. And I think, again, in the market we're in right now, this is crucial to use because I don't think people realize how strong the market is expected to be, even in times of recession, like we just talked about. So I think this is a really important thing to get across to our clients. So, I could use Jefferson County again in Colorado. I'm just on my other screen right now, so you guys aren't seeing me do anything. I'm just pulling in an MLS number here. And when I do, you'll notice that when I click search, it should pull in a good amount of the information for me. If it doesn't though, it's pretty minimal input. So it looks like we're able to see that this home was last sold for almost $400,000 back in July of 2016. And the current ask is $575,000, right in line with what we think the home is worth today. But this customer in this case has to come in $10,000 over asking price. That's the one piece of information we'll never be able to pull in. So make sure you put that in yourselves. We'll click results and you'll see that because of such strong appreciation, we're going to recoup that $10,000 bid above ask in just 2 months. Now let's get a little crazy here and let's just say it's a $20,000 bid over ask. Okay, well, just 3 months then. Even if this customer has to come in $30,000 to $50,000 over asking price, it could be within a year or two that they break even. So it makes it really nice and easy for you to say, hey, if you're going to be in the home for at least 3 months, it's probably a good idea to purchase this home, even though you have to come in $20,000 over asking price. And then looking further than the next 3 months, we're expecting about 4.75% in appreciation every year for the next 5 years, equals out to about $150,000 in just the next 5 years. And you might have customers saying, well, how do you know it's going to appreciate by that much? Well, we can tell them, take a look at history. We've seen it appreciate by about 4.2% every year for the last 62 years. We're not so out of line with that. And based on what the other indicators are telling us, Mr. and Mrs. Client, you can pretty much be certain that you'll make your money back with this investment here. And then we'll really show you the same information graphically below. So since the last sale of that home to how it's appreciated today with that additional $20,000 over, how long it takes us to recoup that bid. And notice that since we pulled the MLS listing, we have a nice photo of the home here and you can toggle between any of them. So we have all the photos that you can toggle and use, zoom in and zoom out of, and you can crop them, or you can upload a custom one too.
I think that is such a powerful thing to share on social media too, because so many people are discouraged because of the market and things that they're hearing. So having to bid over asking and not a lot of inventory being out there, but just the fact that like a value break even is 3 months, that is going to show people that, you're still going to recoup that money. So I think that's a really powerful thing. Like, I know in my own situation, you have family members always telling you and like discouraging you from buying right now, but it really is always a good time to buy. So I think that's really powerful.
Yeah, I agree. My friends too, like, on the other end, I tell them to buy a home. Like my friends,
Yeah.
they just got pregnant, they just got married, and they're thinking of renting, and I'm showing them like all these great tools. And it's really starting to change their minds because they don't know anything
Yeah.
about what we do here, right? In the mortgage or real estate industry. So to have somebody show it to them makes a really big difference. It really educates them. Totally agree with
Yep.
you. So let's move on now to our next tool. I do want to just mention a couple other tools under the real estate section here. I wish we can go through everything today with you guys, but we'd be here for at least like 2 hours. And I know we all have very busy days. You guys are probably crazy busy, so we'll just stick with a few today. So under the real estate tab, you have some demographics reports. You can show an appreciation report for the next 15 years, what appreciation is expected to be. Here's where you can add a widget to your website or your referral partner's website. And then this MB estimate is an automated valuation model. So instead of sending a customer to Zillow to look at their home value, you can do it right in MBS Highway and keep that business to yourself there and your referral partners. So of course, we're not going to go through everything. So if you have questions on it, just call us and we'll walk you through one-on-one whenever you need it offline. Now, under calculators, same story. We have 10 calculators under here, but we're just going to go over one today. We're going to look at this buy versus rent comparison. And it's a really great time right now, especially with how far rents are moving up right now. They're up, I think, 12 or so percent year over year. I forget what the last reading was, but that's a crazy amount. Even in certain counties, like I know here in Monmouth County, they're going up by like 6% year over year. It really makes a big difference. So what I'm going to do is pull in, if anybody wants to give me another zip code, by the way, feel free to do that now, and we could do it for your area. If not, we're going to look where I am in New Jersey. All right, so I'll pull in my zip code here, 07733. We'll click search and then enter the purchase price. So let's just say my customer is looking at a $300,000 home. We'll click continue. And notice now that the piece is automatically done for us. We actually don't have to do anything from this point, but of course you want to customize it for your customers. So on the left side is where you'll have all your inputs. And we're not going to go through every single piece here, but I just want to point out a few. So in this renting section, notice that we pull in a comparable rent here of about $1,800. Since I'm in this area, I know it's pretty accurate. We're going to see, and I was wrong, by the way, it's actually a 3% annual rent increase where I am here in Monmouth County. It's the national average. It's almost 6%. So we'll get new updated numbers soon. But anyway, here in Monmouth County, rents are going up at 3.2% per year, something that renters don't really think about when they're looking at a rental at first. Now we're going to see that our mortgage payment right off the bat starts at around $2,000, and that's not going to change for the 30-year term that they have it for unless they refinance. Then we have our rental payment starts out at almost $1,900. So right off the bat, it's a cheaper expense on a monthly basis to rent, so it seems like a really good idea. But remember that rent increase. Over the next 9 years, it's going to increase to about $2,400 a month to rent that home. And if you look on the graph on the right, by year 6 or about year 5, really, it becomes more expensive to rent on a monthly basis than purchase a home. Now, we're going to see that their customer is going to benefit by about $2,700 if they purchase this home. But let's make this scenario really, really ugly, just to prove the point here that purchasing a home is still a really good idea, even if you get a much lower rent. So if this customer got a crazy deal, let's just say they have a $1,400 a month rent, the story changes by a ton. It's better off to rent now by about $50,000 here, as expected because of how cheap it is. But this is where a lot of people forget about things like appreciation. So we know how strong it's expected to be. In this area for this home, we're going to expect about $172,000 over the next 9 years. Equity through amortization will increase by about $54,000, something that a lot of consumers, again, forget. The mortgage payment that they're paying is not all a cost. You have your interest portion that goes back to the lender, but your principal payment is building your equity in the home. So as long as you keep paying that down, your equity is going to increase by an additional $54,000 here. Then we have our cost to sell, a negative number that we're going to remove from the overall net gain. So we're going to assume that we have to pay 6% off of the appreciated value in 9 years to sell this home with a realtor. So we'll subtract about $28,000. and then a tax benefit above the standard deduction. Now, notice we have a $0 amount here, and you're going to see that a lot unless you're in a crazy area where you see a much higher tax benefit. We're not saying that you're losing anything here, but since these standard deductions are so high, we're just not seeing an additional benefit, something that your competition may be touting and is really just kind of blowing out of the water when it's simply not the main story here, the real story. So when we click show results, you're going to see at the very end, if the customer purchases this home today, stays in there for 9 years, they'll benefit by about $141,000. And notice that it's all interactive. So if I zoom out a bit so you can see the whole thing, if I start clicking on these year bars here, it'll change whatever the numbers are to that specific year. So if the customer only stays in there 3 years, they still see a benefit of $18,000. Now, I just want to show something else too. Coming up to this rent number here, let's just say we have it for $1,000. And then let's say the closing costs are, let's make them $10,000. So now the picture is a little bit different. You're going to see now that after 3 years in that home, they're still going to lose out if they purchase. But if this customer is going to stay in that home for at least 4 years, it's still a good option for them. So what a great way to customize this tool and share them. Hey, depending on how long you stay in the home, there's a different benefit. So I recommend sharing this piece as a PDF. You can put it on social media, you can send it through email or text message, or you can share this as an interactive link, which is probably my favorite way to share this, so the customer can click around on these year bars. All right, so we're going to move on now into the loan advisor section. So if you guys wouldn't mind, let me know if you're more interested in looking at a purchase loan comparison tool or a refinance loan comparison tool. That's the first one I want to show you. I'm leaning more towards purchase because of how the market's looking, but let me know what you guys think. And if you don't have a preference, I will show the purchase one. And while you guys are doing that, just know that you also have a couple other tools under here. We're going to be looking at the debt consolidation tool together. You also have an equity gain calculator showing between appreciation, amortization, and down payment what the expected equity increase is going to be after up to 15 years. LTV analyzer letting you know when that customer will get out or get to that 80% LTV when you can refinance them out of mortgage insurance. And then what we're going to go over now is this loan comparison tool. So you have for purchase clients, for refinance clients, and you also have a version that if a customer is looking at 2 or 3 different homes in different areas, different purchase prices, different property tax rates, you can compare them all in one tool. But just to keep it simple, we're going to look at the purchase loan comparison. So what I'm going to do is pull in some demo numbers, but I will show you what the inputs look like. So first, we're going to see our property information. So we're looking at this $400,000 home. And down here, we're going to have our loan information. So very minimal input, just like all the tools. You're going to hear me say that many times because all of them are easy and quick to use. So you'll be able to enter in whatever information you need here. For your down payment, you have this handy little chart. You can choose the down payment. We'll calculate the loan amount for you. And then you have a second loan option as well. In this case, we're going to work with, fixed rate loans, one adjustable, but you can adjust between conventional or, different government programs, other types of loans, and then a fixed adjustable or a buy down. And we've been talking a lot about adjustables too. So if you watch our last few daily morning updates, we talk about how it's not easy to find a very attractive adjustable rate mortgage right now, but if you can, it's probably not a bad idea. And I'll show you why I say that in just a few minutes here. So then you're going to see on the right side, I have some demo loans already entered. We're looking at a couple with monthly MI, some with upfront MI, some with points, some without points, and then as mentioned, a 7/1 ARM. So you can add up to 10 different loan options here. I mean, it's kind of crazy. I don't think I've ever seen anybody do it. So if you do, send it over. We'd love to see, but we're going to look at 5 for now. So when we click calculate, here are our results. This first chart will just show us the different properties of each different loan option. And then down here, we're going to show the monthly payment at a certain point. And remember, just like the buy versus rent comparison, it's not necessarily just a yes or no answer. Should I go with this loan? Should I purchase a home? Should I rent a home? It could be yes or no, just depends on how long you're in the home for. So if we bring this slider bar on the left side to year 1, you're going to see that you have 2 really good options here, or all of them are good, but just to be specific, you have this 2 points upfront MI option. Your monthly payment's only $2,500. Your 7/1 ARM is about $2,600, almost $2,700 here. But then if we keep an eye out on this adjustable, If we go to year maybe 16, look how much higher that is now. The whole payment's about $3,400 and your interest portion is crazy. It makes up a majority of it. So if this customer is in that home for 16 years, that adjustable is probably not going to be the best idea. We'd probably lean more towards this 2 points monthly MI option. Then we'll show you the cumulative interest over time. So again, just to show you guys how we can really paint the picture here. So if I remove the principal portion, you're going to see that this adjustable is looking really good. You're only paying $14,000, $15,000 in interest versus your next highest option, about $16,000. But again, if we drag this out to a later year, I'll remove the principal just to keep it clean, that interest portion shoots up. So no, it's not such a good idea for a longer time in that home. But this is really like your big picture on the page here. So I'm going to bring this back to year 12 or so, just so we can zoom in a bit. And this shows you so specifically what the best loan option is, again, depending on how long you're in the home. So it's all color coded here. You can see each of the 5 loan options are laid out by color. And then the shading below represents what the best option is. So if you're in that home for 3 or less years, you should go with that no points monthly MI option. Between 3 and exactly 4.5 years, the adjustable. For maybe 6 months, the upfront MI option, no points. And then anywhere after that 5 years, the 30-year, 2 points upfront MI option. But this is where you show this to the customer and say, well, I don't really know how I feel about the adjustable. Okay, well, we'll remove it. Now we see that that 30-year, no points upfront MI option has expanded a bit. Well, then they come back again and say, well, I don't know if I'm going to be in there for 3-4 years. Maybe I'll be in there, a couple years less. I don't really want to pay upfront points. Well, okay, we can remove those. So we'll remove the 2 options with upfront points. And now what we have is a very clear break even. And the question to ask the customer is, okay, do you want to pay monthly MI or do you want to pay upfront MI? And the answer is easy for them to think about. If they're going to be in the home for greater than 3 years, 3.5 years, they should pay upfront MI, no points. So sit down with your customers and create pieces like this for them if they're considering different loan options. Again, I'm going to mention it. The adjustable rate mortgages that we're hearing about right now, that, when you look at the indexes that the ARMs are based off of, like the SOFR index or the LIBOR index, they're all based off of things like the Fed funds rate. And we're seeing the Fed funds rate go up. I don't want to say hopefully, but we need to have a way to tame inflation in the next year or so. We're expecting it to go up to about 2 or 3% on the Fed funds rate. And these indexes follow that Fed funds rate. So if we start to see it increase, these adjustables are going to have higher rates, of course. They're already high now, and we have more upfront costs with them. So it's not always easy to find a good one. But since, as we mentioned before, we're expecting recession to happen in the next year or 2. So if that's the case, maybe take advantage of them now, do less upfront costs if possible, and then refinance out of them within the next year or 2 and set yourself up for that second loan. Our goal is not only to set up 1 loan at a time, we're setting up 2 or 3 at a time so you can write your next loan in the future. Now, the last piece on here is going to be your balance chart. And this simply shows you from the starting balance what the current balance is at that year that you stopped at. So this is another tool I'd share with an interactive link if you're not already sitting there with the customer showing it to them, but you can also export it as a PDF. Now, while we're on this tool, I do want to say you have a great cost of waiting comparison. If the customer looks at this and says, well, yeah, that 30-year, 2 points monthly MI looks good, but maybe I want to wait 6 months. I want to get my credit score up, try to get a lower rate. I heard that rate's going to go down in 6 months to a year. Okay, well, let's see what that looks like. If you click this little green clock icon right here, we're going to see that that $400,000 home they're looking at today in just the next 6 months is expected to appreciate by about $17,000. And if we assume this customer keeps the same LTV, both their loan amount and their down payment increase. And in this case, we're going to assume their 4% rate goes up to 4.25% in the next 6 months. I know, guys, your rates today are probably not 4%, forgive me, but this is just a sample scenario here. So let's just say they go up by 0.25%. Down here, we'll show them right off the bat, because of that higher rate and that higher loan amount, your monthly payment would go up by about $135. Annually, that adds up to about $1,600. On top of that, though, if you waited to purchase, you are going to lose out on the chance to gain about $17,000 in appreciation and then another $3,000 through amortization. So overall, you're going to miss out on the chance for $20,000 plus your monthly payment going up by $135. And obviously, the further you go out in the future, the higher those losses get. So this is a great tool to show right now because we know that appreciation is not going to slow down. Hopefully rates will though, but I actually want to show you something here that proves that point. So if the rate today is 4%, let's come in here and edit this 6-month value. And let's just say that rates go crazy down and they go to maybe 3%. Hopefully that happens. We'll see. Maybe when the recession hits, we're going to start to see rates go down, but hopefully sooner. So again, the rate today is 4%, the rate in 6 months is 3%. And we're going to see, well, yeah, it saves you some money if you wait 6 months, $130, but that still doesn't take into account the loss between appreciation and amortization. So now is definitely a great time to buy. And that's how we present this piece to a client. So we're going to move on to the marketing section now, but I see a question. Is there a video somewhere on the platform that talks about rates going down next year and why? So Jody, we actually talk about that in the daily morning update. So we have, some presentations in this Presentation Expressway library, but instead of digging through those, I just recommend that you watch the updates every morning, and then you'll start to hear us talk about different trends. So I don't know the exact, that we can talk about the exact reason right now, but in the chart that I showed earlier, where we show that interest rates go down during each recession period, it's happened every single time since the 70s or since the 60s even. So we do show that chart in the morning update, but that's the best resource I could tell you. Sure, no problem. All right, guys, so let's look at the marketing section. And right when we're done with that, we'll have about 10, 15 minutes to go over any questions we have, and we'll get out of here. So under the marketing section, we have open house flyers. Again, that's something I'll show, but it is MLS integrated. Be sure to put in the MLS number, and if we have access to it, we'll pull in all the photos of the home for you. You can enter a loan comparison or a cost of waiting on the second page. We'll show you school information in the area, restaurants nearby, just a nice marketing kit basically that you can share with your realtor partners for their open house flyers coming up. Then you have a newsletter. Then you have a newsletter. This is something that we release every week that you can share with clients and referral partners. You can easily copy this text and paste it anywhere. You can download it as a Word document or download it as a PDF with your branding information on it. So I kind of think of this as a compilation of the morning updates from the last week, all put into one newsletter, and it just gives you a really good breakdown. Then also under the marketing section, we have this social studio tool. Also, always one I like to share because it's so easy to get started with. Remember that real estate report card that I said was so easy? All of them are easy, but I think you should start picking a few and just start with them, right in the beginning. So the social studio one is one of those tools. So in this library, we have a bunch of different scripts on many different topics. We're going to try to release one soon. We try to release them every 2 weeks. You'll notice they look like they're monthly in this case, but we delete any of the dated or old news here, so you don't talk about something that's a bit stale. So you have all fresh news here. So in this one, we talk about the Fed's recent rate hike and what it means to the markets. So let's say we want to talk about that. Here you can enter whatever you want. So if I say Diana here, MBS Highway, you can enter that and then make any other edits you'd like, if any. And then we're going to proceed to desktop mode. It'll turn your computer screen into a full-size teleprompter. And when we do, we'll access the camera and the microphone. And here we are. And before we actually start recording, preview the scroll speed and the font size, and just make sure you're comfortable with it. If it's too fast, too slow, you can speed it up, slow it down, or you can increase or decrease the font size. So once we're ready to start recording, we'll hit record. It'll count you down 3, 2, 1. And then you'll just start reading. So right now I'm looking right at the first line of text, but it looks like I'm looking right at you guys in the eyes. And that's exactly what we want for an engaging social media video. And once we're done recording, we stop recording, watch it back, make sure you're happy with how it looks, how it sounds, re-record if needed, of course. It's definitely not easy the first time, but we try to make it as easy as possible here. And then once you like how it looks, you can click download, and then share this MP4 file to Facebook, Instagram, LinkedIn, Twitter, wherever else, all the other social media platforms, share it everywhere. Because why not? You want to get yourself out there as the mortgage and real estate expert in your area. And not only do we recommend you use our scripts, you should also write your own custom scripts. So once you start watching that daily morning update, if there's a topic you really like and really feel comfortable presenting, type it up here and talk about it. You can use our text if you want, just retype it. We don't care if you plagiarize us. We want you to use this information for your clients. We don't even need the credit. We just want you guys to share it. So be sure to use these custom scripts. And, if your company depends on, what company you're with here, your company might be able to write you some custom scripts too. Yeah, I see you guys like this tool. That's great. So under the marketing section again, let's take a look at this presentation expressway library. And this is not necessarily a tool, but just kind of a library of different pieces of content that you can use. So what you can do here is download a presentation for a bunch of different topics. So the recent one is our 2022 market forecast. And this is where we talk about our expectations for the year. And we're very, lucky and thankful that every year, not lucky, but, a lot of work goes into it, but we're very thankful that we're able to have really good forecasts each year that actually play out every single time. So we've already hit many of them in here. So it'll be interesting for you to watch that. But there are also some that haven't fully played out yet. So be sure to watch that one. Does today's housing market resemble 2006? This is a really good comparison too, because a lot of people think that, especially those in the media, just because home prices are higher and rates are higher, that it's automatically more expensive to purchase a home than what we saw back then. Well, there's also income that goes into the equation, and incomes are rising at a rapid rate. I mean, they're really rising. And not all of your income goes towards your mortgage payment. So we want to express that and stress that to our customers that even, even just because that rate's a little bit higher and the home price is a little bit higher, the ratio or the amount of your monthly payment, your income that goes towards your monthly payment is actually less now than what it was back then. So it's actually more affordable. So that's a really great one. And then you have the rest here. So on all different topics, you can give this to, a presentation for realtors, current renters, first-time home buyers, do lunch and learns with them, or even just pop up on Facebook Live or Instagram Live and talk about a presentation like this. Sometimes you don't even have to show the slides. I mean, it's nice if you have a Zoom or a GoToWebinar that you're doing, but even if you just get the content across, the knowledge across, that's really what matters here. So I'm going to bring it back to the dashboard. I see a question.
Diana. Yeah,
Sure.
sorry, I was going to interrupt you. Just
problem.
the question that came through about, it was when you were presenting on the social studio.
Sure.
So the scripts, have they passed compliance, or do you recommend inquiring within our own company?
So we make sure that everything is safe in there to talk about. We don't talk about exactly, mortgage rates that you can offer today or, anything that is worrisome. But we always recommend that you go back to your company and just double check. It doesn't hurt to do so. And they can probably give you some good advice. Yeah, you got it. All right, guys. So that's the end of the presentation. We have 17 minutes left. I'm more than happy to stay and answer any questions you guys have. But I know it's a lot in one session. So I actually want to point out while I'm here, since you're all members here, on the right side, you have these weekly training webinars. So if you register for that, that's about an hour to an hour and a half long each week with one of our team members here. They kind of do what I did, but a little bit more detailed because there's more time available. So they'll break down almost every tool on the site. But as I mentioned, also be sure to look at these help videos. Those are super helpful and you don't have to watch, the whole training video to see one tool. And one more point, with the weekly training webinars, even if you register and don't actually join live, we'll send you the recording after. So you can always get that.
That's awesome. Thanks, Diana. This was great. And I'm so blown away by the tools in MBS Highway. And especially right now in the current market and with everyone being so undereducated about this kind of stuff, this is such a big opportunity to take advantage of all of the value that is in MBS Highway and share with the people in your network. So along with any questions, I would encourage you, I'd love to hear from the group, are there certain aspects of MBS Highway that you are using with clients that are really valuable to them or really eye-opening? Because I think there are so many, especially the value of buying now, even if you do have to stay in the home for, let's say, 3 years and gain that back. I think that's just a really eye-opening thing for a lot of people, and it's really valuable right now in the market. So anyone raise your hand, chime in. Is there anything that you're using in MBS right now? Anything that you're sharing on social media that you've seen go over really well? Or of course, any questions for Diana?
And you brought up a good point, Val, while we're waiting for anybody to comment here. We're not just showing the good about home buying and refinancing and all that. There is some bad in there. Like I said, on that buy versus rent tool, we consider things like an annual property tax increase, a cost to sell that home, and what was the other one? It's like a maintenance and repair cost. So those are negatives, but we want to show our customers everything to help them make the best decision. So if that break even for a $20,000 bid over asking price is 16 months, if they're in that home for less than 2 years, it's not going to be a good idea, or a little over a year, whatever it is. So we're going to show them both the good and the bad, but we just want to help them make the best decision. Luckily enough, though, most of the time the decision is, the numbers are good where they'll actually make that decision that'll help us as, you guys as loan officers to either purchase or refinance.
Yeah, absolutely.
Michelle loves the buy versus rent and everything. Thanks, Michelle. Glad you're liking it.
I think that is, that's something that I think a lot of people like our age, Diana, don't understand, is like being in, my friend group. Like a lot of people don't really see the value in buying a home because they don't understand how you're building equity and can like leverage it moving forward. So it's so much easier to just say, I'm going to continue renting. But when you show someone something like that, it's so powerful. So really eye-opening and educational.
Yeah, I talk my friends' ears off about it all the time, whether they want to hear it or not. I'm like, guys, take a look. Even just as an investment too, like I personally want to get into some, development and, real estate investing, and I'm not trying to delay it for any reason other than I'm scared to start. I know it's a good opportunity, so that's what I try to tell people. I mean, just the sooner you start, the better. Barry, he presents on this slide about exponential growth where he asks, would you rather have 1 penny or would you rather have $1 million? And most would say, because we're all smart in this industry here, we'd say a penny. And the reason we know that is because of exponential growth. So we see that after the first week, that penny only adds up to about, I don't know, $6 or so. If you double it every day for a week, then $20 after the next week. But after that third and fourth week, it equals out to millions of dollars. And if that month has 31 days, for example, that last double brings that one little penny to $10.7 million. So that's why our main point is stressing, do not wait and start now. And that goes for using the MBS Highway tools too. If you start using them today, you'll close an extra loan. People are doing an extra loan a day with the debt consolidation tool, which I didn't show because I wanted to leave time for questions. But the debt consolidation tool is huge. I mean, if you guys aren't using that, I hate to say it, but it's a waste of the opportunity you have out there, because yes, there are many that can benefit from a rate and term refi. I think there are about 2 million individuals still, from the latest report we got from Black Knight. I think it's like 2 million individuals that can benefit from a rate and term refi, but there are some, very strict qualifiers there. They have to have a 720 credit score. They have to have an 80% LTV, and they have to benefit from an MI reduction. But you forget about those that even if you can't lower their rate, their credit score is lower than 720, they can't remove MI. Look at the equity we have today. It's the highest on record. So using the debt consolidation tool to do things like cash out refinances is what gives you that big opportunity. So it really is a missed opportunity if you don't use the tools. Can't stress that enough.
Yep, agree. Well, Diana, it looks like there are no other questions, but I encourage you all, if you ever have questions, reach out to the MBS team. They're great and providing such great information and insight for this industry. So we appreciate you being part of our platform. We appreciate you jumping on today, Diana, and we'll see you soon. We'll come back for another webinar soon.
Thanks for having us. All right, guys. Thank you so much for joining.
Thanks, guys. We'll see you next week.
See you soon.
Bye.